Hi, and welcome to the Learning Center from Homeowners Financial Group. And today, we're here to talk about closing costs. You know, no one likes to pay closing costs to get a loan, and in fact, most people think closing costs are too high. Well, the reality is, there are fees associated with getting a loan. Unfortunately, consumers have a perception that closing costs are too high because our industry's done a poor job communicating what the costs are, who they're for, and how they benefit the borrower. Believe it or not, relatively few charges provide profit for the title company and even less for the lender. The majority of the charges represents the cost in gathering the documentation that's required by the lender. And that documentation is designed to protect the lender and in turn protect the borrower. So let me show you where your closing costs go. Here's a simple breakdown of a $170,000 loan. As you can see, 10% of your closing costs go to the appraiser. 28% goes towards your homeowner's insurance, property taxes, along with any prepaid interest. 28% also goes to the title company that your real estate agent selected. And finally, 34% goes towards the lender. So even though the good faith estimate is provided by your loan officer, 66% of your closing costs are not determined by the lender or paid to the lender. So let's talk about what some of those closing costs are and how they benefit the borrower. So grab a copy of your good faith estimate to follow along. Let's talk about title insurance because that's a big expense. Title insurance protects the borrower from someone making a claim against the home you own. Here's a common example. You buy a house from a seller that doesn't have the legal right to sell it in the first place. We see this in divorce situations. One spouse sells the house without the consent of the other spouse. After you take ownership, a spouse comes forward and makes a claim against your home. Title insurance protects the borrower from claims like this and dozens more. It's an expensive cost, but it's the best value and the best protection the borrower could ever buy. So let's talk about another large expense, and that's the underwriting fee. Well, for starters, the underwriter is the person that approves your loan. They represent the lender and are protecting the lender's interest. But the underwriter is also protecting the borrower's interest and in many situations saves the borrower thousands of dollars. Here's a perfect example. The appraisal comes in and the underwriter feels the purchase price and the appraised value is too high, and in fact, the borrower is overpaying for the property. In most cases, the seller has to come down in price, saving the borrower thousands of dollars. So is paying the underwriting fee a good thing for the borrower? It absolutely is, because at the end of the day, the underwriter is protecting the borrower. Okay, one last example, and that is, sometimes it's the small charges that bother the borrowers the most. A small charge like a flood cert. Well, a flood certification is usually around $20, and that's the cost to obtain a certification from a company in Arizona that determines if your house is in a flood zone or not. So, is dropping $20 a good thing? Absolutely. Better to know now than when it's raining outside. So it may be surprising to know that there's over a dozen professionals working very hard on your loan, and the borrower might meet only 2 or 3 of them. So let's take a look behind the scenes and see who these people are. So on the lending side, there's a bunch of people. Of course, you already know who the loan officer is, and they've got a loan processor, which you probably speak to or get an email from. There's the credit agency, there's the underwriter, there's the lock desk manager, there's the doc manager, this is the person that draws your loan documents, there's the funding manager, this is the person that funds your loan, and of course, the Federal Reserve Bank is involved. From the title company, there's the escrow officer, there's the title agent, there may be a mobile notary involved, there's certainly a recorder, and there's a courier as well. Some of the other service providers is, of course, the appraiser. Maybe there's an HOA company. There might be a home inspector, a termite inspector, and of course, there's your homeowner's insurance agent from, let's say, State Farm or Farmers. So that's a bunch of people, and it's important to remember they all play a critical role in helping the borrower buy their home. So I hope this explains the value of closing costs and how it benefits the borrower. Should you have any additional questions, just give your loan officer a call. They'd be happy to help. Thanks for visiting the Learning Center, and have a good day.